Good morning, everyone, and welcome to another RF Crypto video. Today's markets, they're doing pretty good. The markets have gone up by almost 2%. It's now standing at 1.92 trillion. Both Bitcoin and Ethereum have gone up by almost 2%. We are seeing the markets mostly in the green as we see the fear of the hawkish statements by the Fed and the fears of the Eastern European conflict simmering down a little bit. So people are becoming more risk prone and investing more in higher risk assets such as cryptocurrencies. The rest of the market is doing great. We haven't seen such massive jumps, but small jumps are better than nothing. So we have to take what we get. At least the price of Bitcoin isn't below 40,000 anymore, and Ethereum's price is edging closer to 3,100. Looking at the price of Bitcoin, we see that it is trading now between $40,000, which is the support level, and 42,000, which is the resistance level. But now it is trading laterally, and you can see red, green, red, red, green. It's trading sideways, but on a higher band towards the $42,000 resistance level. There is a higher chance for Bitcoin to actually break through this 42,000 level and head to 45,000 than there is for it to go down below 40,000. So things are looking good in the markets, and there is quite a big chance for Bitcoin to break this resistance level and make its trajectory upwards. Looking some news, there is some brain drain going on in India's crypto industry, and a lot of crypto projects are moving abroad. So if you don't know, India recently implemented a 30% crypto tax on the 31st of March, which was effective on the 1st of April. And this is a 30% flat tax on every single crypto transaction that obviously makes a profit. And they implemented this despite warnings from several stakeholders about its possible ill impact on the budding crypto industry. The crypto industry in India is relatively young, it's relatively unregulated, and they go on to make it so severely restrictive and very much not conducive by implementing such a hefty tax on the industry. And just weeks after this new crypto tax law came into effect, trading volume across major crypto exchanges in India dropped as much as 90%, and the decline in trading activity was attributed to traders either moving their funds away from centralized crypto exchanges or adopting a holding strategy over trading, because it doesn't make sense for them to be trading because there is such a massive tax that they'll have to pay. They rather just hold their cryptocurrency or move their funds abroad where the tax laws are more friendly and where regulation is in place that will allow them to trade freely and in a more friendly manner. And because of this new tax regulation, which was implemented very rashly and without much thought, the Indian crypto ecosystem is suffering from brain drain. So here it says that the Indian crypto ecosystem has thrived over the past few years, producing several unicorns despite a lack of regulatory clarity. And many stakeholders of the ecosystem had expressed faith in the government with hopes of getting some regulatory clarity pretty soon, because as early as 2018, India said we will implement a regulatory framework for crypto and it's going to be friendly. But now it's proving to be the opposite. And this is evident by the regressive tax laws that are coming into effect and has caused many crypto platforms to decide to move abroad. For example, Polygon, one of India's leading Ethereum scaling solutions, is looking to shift its base along with Push Token to Dubai. Also, Pushpendra Singh, a leading crypto entrepreneur and founder of crypto media platform SmartView AI, has said that India's dithering on whether to embrace digital assets is causing thousands of developers, YouTubers, startups, investors, and traders to leave for places with more friendly regulation, countries like Dubai or El Salvador. And according to a recent report, the Dubai DMCC free zone, which allows for crypto companies to be established, has said that 16% of the new company registrations recorded in Q1 of 2022 were crypto and blockchain companies. Millions of young talented Indians from various disciplines have left Indian soil in search for better opportunities, especially to countries encouraging Web3, the metaverse, and blockchain development. And as I said before, you need to have clear and friendly crypto regulations such as the likes of Dubai and El Salvador, because the world today is very much globalized. You can choose to establish your company anywhere. You can choose to trade anywhere in the world. So countries are actually competing with each other to attract the best companies in this industry and the best talents as well. So if you're implementing a 30% tax on crypto, then I don't think it is a very good idea, because these companies can just move to Dubai or El Salvador like they are. And it will dissuade new companies from forming in India. You might have a lot of Indian entrepreneurs who have extremely good ideas, and those ideas could lead to unicorn companies that, if India had friendly crypto regulation, they would establish their company in India. But because they don't, they might choose to establish their company in Dubai or Germany or El Salvador, where crypto regulations are more friendly. And what does that tell us? That tells us that, firstly, India is losing a lot on tax revenue, India is losing a lot on jobs for its people, and India is losing a lot of fantastic talent to other countries that it could use to nurture and help grow this budding industry. And as I previously mentioned, the Indian government has failed to submit a draft crypto bill despite assurance on the same since 2018. And at the same time, it has rashly formulated new crypto tax laws within 2 months. This was very, very rash, that are heavily inspired by the country's gambling and betting laws. The government has also failed to take input from stakeholders in the crypto ecosystem, and the disastrous impacts is for everyone to see within the first month. It doesn't make any sense to take gambling and betting laws and implement them into crypto. They're not the same thing. So it's unimaginable why they would do such a thing. And this is what caused a lot of companies to sort of look back and say, I thought I could trust this government. I thought that we had some assurance since 2018, but 2022 comes and they're looking at other industries to implement laws and tax regulations such as gambling and betting, instead of actually asking us for opinions and how the blockchain industry can actually develop. It could be mutually beneficial for both the government and the stakeholders in the industry. Is there a solution for this? So a major concern for Indian ministers seems to be the use of crypto for illegal activities. However, the notion has been debunked several times over the years, and the latest report from Chainalysis indicates that the use of crypto for illegal activities has gone down to less than 1% of total circulation supply. So there is no reason for them to believe this, because they could implement a sort of cyber task force to keep an eye on all the transactions that are taking place. And because blockchain is public and everyone can see it, it's easier to track where the funds are going. And I think this excuse that they're using is quite invalid. Therefore, the solution here is for a formidable crypto framework, and the government can take inspiration from its Asian counterparts such as Thailand and Malaysia. For example, Thailand scrapped its early proposal of a 15% crypto tax on capital gains, and also exempted traders from VAT on regulated exchanges to promote the use of crypto. The Indian government has to act fast to undo the damage that it has already been done by the 30% tax. Otherwise, it will be a spectator looking from the outside while other countries are thriving. Looking at the markets, the altcoins outperform as sentiment improves, and Bitcoin is within value zone. So Bitcoin and other cryptos traded higher on Tuesday as bearish sentiment over the past few weeks appears to be fading. Most alternative cryptocurrencies outperformed Bitcoin, suggesting a greater appetite for risk among traders. And this is further enforced by the increase in the Fear and Greed Index, which obviously measures the sentiment of the market. The higher it is, the greedier the traders, which means that they are willing to take more risks. And we see this through the inflow of capital into the crypto industry, Bitcoin, and as well as altcoins. Stocks were also higher on Tuesday as a 10-year treasury yield rose towards 2.9%. Also, gold, a traditional safe haven asset, traded lower over the past 24 hours, indicating a riskier tone in the global market. So when the price of gold goes down, that means people are selling gold and they're taking that money and investing in riskier stocks, which means that the risk appetite has increased. It's a gauge to measure risk appetites in the markets. Also, Bitcoin's value zone, a large amount of Bitcoin supply has been accumulated between the $38,000 and $45,000 price ranges. Typically, price value zones are areas with a large amount of trading activity that precedes strong breakouts or breakdowns in price, which means that there is an opportunity for the price of Bitcoin to shoot up to $45,000 because it's trading now laterally but closer to the $42,000 resistance level. Also, despite an additional 2 months of sideways consolidation, a large proportion of the market appears unwilling to spend or sell their coins, even if their coins are held at a loss. This suggests that price-insensitive traders hold much of Bitcoin supply above the $40,000 level, And what this means is that these guys are long-term hodlers and they believe that the price of Bitcoin is going to explode. So it is a bullish signal for the market, and we'll just have to see how the market pans out in the next few days. Australia's first Bitcoin ETF could attract $1 billion after launch next week. So Cosmos Asset Management beat out local contenders VanEck, BetterShares, and EFT Securities to issue Australia's first Bitcoin ETF to begin trading on April 27, which could see up to $1 billion in inflows. This Bitcoin ETF will be listed in CBOE Australia, and it will offer indirect exposure to spot Bitcoin investing through the Canadian Purpose Bitcoin ETF, which is a spot Bitcoin ETF. Also, the approval of the first Bitcoin ETF validates further institutional adoption in Australia, which has been taking a step forward. Also, it's predicted that a successful launch on the 27th of April will lead to an influx of other players. So we could see a host of listings for crypto asset-based funds outside of Bitcoin. Most crypto-based funds are now mostly Bitcoin or 95% Bitcoin. But if Bitcoin ETF is successful in Australia, we might see Ethereum, Solana, Polygon, and others breaking into this ETF area as well. In Australia, the Australian Securities and Investment Commission regulations will come out governing crypto assets, and we expect greater clarity for local custodians and service providers, opening up this as an avenue within the coming year. And this will give a greater sense of security to the existing crypto companies and new crypto companies that would want to be established, as well as traders in the market. If there is a set framework, people know what to do, and they're not scared to act on it. More volatile than Bitcoin, Netflix shares plunged by 25%. So the streaming service stock price dropped by 25% because it has lost 200,000 customers in the first quarter of 2022 and projects that it will lose a further 2 million subscribers this quarter. And this kind of makes sense because they keep on increasing their prices, but their content has stagnated in the past few years. So the Netflix stock price has performed worse in 2022 than Bitcoin has this year. It has lost 57% since January 1st, 2022, when it was at its height for the year at almost $600 per share, and now it's at $258. By comparison, Bitcoin is down 11% since the 1st of January. Other tech stocks have also seen crypto-like daily losses this year. On February 2nd, PayPal dropped by 20%, and on the same day, Meta platforms, which is basically Facebook, dropped 25%. Analysis carried out by crypto research firm Into the Block found that Bitcoin and Ether have been less volatile than many stocks, especially those with crypto offerings. And this is a narrative that is quite interesting, right? Because the people who are proponents of stocks were always saying that crypto is so volatile, crypto is this, crypto is that, the prices fluctuate. But now the same thing is happening with tech stocks. Netflix, Meta, PayPal, they all seen crypto-like fluctuations. And their fluctuations are actually higher than what crypto has been since the beginning of this year, which means that crypto is maturing more, and now it's becoming more equivalent to the Nasdaq tech stocks. So it is very interesting, and I find this to be sort of like a turning point where people in the stock market are now starting to realize that it's not so different than from trading crypto, and we might see further adoption. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.